Welcome back, Plutus people. What does souvlaki and a good option contract have in common? You always have to account for the Greeks. Now, this might sound foreign, but we're going to be talking about an important concept when you start option trading. Today, we'll be talking about the fun world of Greeks that govern option trading. So today, we'll be talking about delta, which is one of the four major Greeks that govern option pricing. If you haven't watched our videos on call or put options, please check them out so that you can understand all the terminology, because our goal is to make it extremely simple for you to understand how option trading works. So jumping back to delta. Delta is a measure of the change in the price of an option or the premium of an option with a change in the underlying security. So talking about a put option, they have deltas ranging from -1 to 0 or 0 to 1 for a call option. Put options have a negative relationship with their underlying security, hence a negative delta, whereas a call option has a positive relationship with their underlying security, leading to a positive delta. The best analogy to understand how delta works in real life is what I got from Investopedia, and I really love this example. So think of delta as a racetrack. So if you have a race car and it has really poor tires, then it would not get a lot of traction. So if you accelerated really hard with economy tires in a race car, you won't get much traction. So that would mean something with a low delta. But with a high delta, think of a race car with extremely good tires, and even if you accelerate, it would pick up and have great traction, giving you a good equal result of your acceleration into velocity. So that in a nutshell is what delta is, and we're going to make it easier for you by using it in real life examples. So let's explain delta when applied to an option contract. So let's say you have an out of the money call option that you bought at $5 premium. So you paid $5 for that contract, and it has a delta of 0.25. Now, with $1 change in the underlying asset, so let's say you bought Apple's call option and you paid $5 for that contract. Apple was trading at $120. It had a delta of 0.25. Now, Apple moves up to 121. Your call premium that you have paid would increase by 0.25 to 5.25. So here in this example, you can clearly see that $1 change in the underlying stock increased the call premium by the delta amount of 0.25. Applying the last tidbit that I used as an example of probability of a call option ending up in the money, we're going to talk about at the money option. So at the money meaning Apple is trading at 120 and you want to buy an option with a strike price of 120. Those options will have a delta of 0.5 because there's a 50-50 chance of it ending up in the money. So if you think of that example and use that as a baseline, you'll always know what a delta is and you will not get lost in the sea of Greeks. So we will apply delta to put options now. As we already discussed, put options have negative deltas because they have a negative correlation to their underlying security. We'll put this together with a real life example again. So let's say you are bearish on Netflix and you're hoping that Netflix crashes to $500 a share. It's trading at $550 as of today. I pay $2 for a put option that is a put option for 500 strike price, and I pay $2 for it. It has a delta of -0.5. So let's say tomorrow Netflix starts trading at $551. My premium will change by 0.5. So my put option will go down by 0.5 to $1.50. Conversely, if Netflix goes down towards what I expected it to do and go down by $1 to $549, my put option will rise by 50 cents to a premium of $2.50. I'm also quickly going to introduce the idea of exchanging, selling or buying options here. So let's say I bought it today for $2 and it moved in the direction of what I wanted it to do. I'm going to pocket that nice 50-cent change when I sell it in the open market for $2.50 if Netflix did move by $1 in the direction that I predicted it will do. Since you have understood how delta applies to call or put options, I'm gonna give you guys a cheat code of how I use delta in day-to-day option trading. So I use delta as a probability of a call option or a put option or an option contract in general ending up in the money. So let's talk about it. Let's break it down. So for example, I really like Visa stock, our last ticker of the week. So let's say you bought a call option for Visa with a delta of 0.5. There's a 50% chance that this option contract will end up in the money and pay you. Let's also talk about a put option. So let's say you were bearish on Ford because, you know, as Papa Elon said, that Tesla is going to take over the world and gasoline cars are going to be like having a horse in the car era. So let's say you're bearish on Ford and you have bought a put option with a delta of negative 0.25. There's a 25% chance your Ford put will pay off and you will be proven right as Daddy Elon. So this is how I use delta in my day-to-day trading. I look at a call option. It has a delta of 0.6 to 0.7. I think of that as a good delta entry point. I say there's a 60 to 70% chance that I'm going to make money on this call option contract, and then I just go with it. However, as we're going to talk about more Greeks and more complexity, you will realize that that's not the only measure that you think about, because options with a higher delta are more expensive because they have a higher chance of ending up in the money. It's time for Ticker of the Week, your favorite segment. By the time this video will be out, you will have the opportunity of investing in this company. How can I not talk about Coinbase IPOing when, well, IPOing is not the right term actually, it's a direct listing. So how can I not talk about Coinbase when we have a full series about cryptocurrency? And Bitcoin has hit its all-time high in anticipation of this Coinbase doing a direct listing. Now, as always with the Ticker of the Week, do your own due diligence, but I'm very excited that Coinbase would start trading at some point on April 14th, and I'll have it in my watch list like you should too. My advice would be just wait, watch, and then probably get in if you believe in the company.